What's up? This is your host, Non-Fungible TC, Non-Fungible today and Non-Fungible tomorrow. And yesterday, wow, the market just rallied. So basically what happened is that the inflation numbers came in, the CPI came in, it was better than expected, and the markets just basically just rallied. And at the same time, earlier this morning, my time, Ethereum pulled up its final test for Gioli, and it was kind of a success, right? So now people are really bullish for Ethereum, and yeah. And so today's show, I don't really want to go talk about daily news, but rather I want to go through with you a report by Morgan Stanley, and at the same time, I want to talk about Ethereum 2.0, what to expect, and a very interesting news that I saw from NVIDIA about the metaverse division. So without further ado, let us go to our first topic today. So what happened was that around 2 days ago, Morgan Stanley, which is a very big investment bank, their research division came out with a report called the Crypto Cycle. So this is actually a report for institutions. So you have to be like an institution trader or something like that in order to have access to this report. It's different type of crypto media did cover this. They covered like a metrics that they use in order to track Ethereum. But I do want to go through the report. I won't go through the whole thing, but I want to go through some of the key takeaways, right? So basically what Morgan Stanley is saying that all the past bull and bear cycle for Bitcoin is driven more by price speculation rather than a fundamental payment demand, okay? But I think it takes time to develop for Bitcoin because now we have the Lightning Network where we do have developing nations using the Lightning Network for payment and settlements, right? So they are saying that past major price cycles have similar characteristic. Speculation about a particular part of the crypto ecosystem potential followed by a downturn due to a regulatory shutdown or dominant exchange being hacked, like the Mt. Gox incident in 2013, are leading market to see the price were not elevated due to fundamental payment demands. And then they said in the last 6 months, the 6 months correlation between Bitcoin and the US equity market reached the highest in its history as the cycle has been about risk asset being driven by central bank and government stimulus, right? So from this crypto cycle to find a bottom, we need to look for fiat money supply contraction and also increase crypto leverage again. So what they're saying is that in the previous bull market, because we have a lot of crypto leverage, right? You have people borrowing money. It was able to push the total market cap up and in general push all the price up. But now because you have the Lunar incident, right? You have the VAC incident. You have a lot of protocols or like a lot of centralized exchange going bankrupt. This kind of leverage, right? This kind of borrowing money has been deleveraged, right? So that's why our market cap is now back at 1 trillion, and this is the reason why, right? So in order to have a bull market or in order to resume back to previous all-time high, the market will have to be in a condition where first of all you need new money coming in, maybe institutional money, and at the second of all, you need leverage, right? You need people borrowing money and then making the pie bigger, right? So a major difference between this cycle and the previous cycle is the high involvement of crypto institutions. So this cycle, there is indeed more institutions involved, and therefore we were able to reach these higher highs, right? So if they talk about the 4-year cycle for Bitcoin, so Bitcoin's price on a log scale has been generally correlated with the annual pace of Bitcoin creation. Okay, as the Bitcoin price has risen over the past decade, the percentage size of the rallies and fall within a cycle has fallen, and in one case, in a consistent way. So what they're saying is that there is, in terms of price, there is this effect of the halving. So the halving is basically miners need to mine longer in order to get. Simply put, the rewards would be shorter, right? It'll be halved, right? So miners could get less and less reward, and they're saying that there is the halving, and the halving does affect the price, right? So for Ethereum, they introduced something called the price adjusted volume per address, a cyclical indicator which monitors the extent to which Ethereum's price action has been driven by speculation versus its blockchain usage, right? So basically, it is a indicator to show you whether this price action is done by fundamentals, the utilization of the Ethereum blockchain, or whether it is more done by trading, right? So they're saying that the indicator reached a extreme low on June 16, 2 days before ahead of the ETH bottoming, right? And then after that, Ethereum rallied 100%, and we did see that yesterday. So it really shows you, this indicator and also how important it is. But however, this indicator is hard to use for Bitcoin, they just say, because Ethereum, is more traded as like a network compared to like a store of value. Then they also talk about the different type of leverage sources, and then they estimate that some form of crypto leverage are down over 50% from the peak, okay? So they do talk about where are we in the crypto cycle. So one of the takeaways is that it's hard to say whether the bear market is over or there's more to come. The correlation between the Bitcoin and US equity market remains high, and both are sensitive to central bank tightening expectation. So it seems like right now the market is indeed dominated by the equities market, and also how the central banks react, like, because you see all of these fluctuations, right? These fluctuations are actually done by these rate hikes, right? So the next one is that they talk about in the past year, in 2013, what happened, like the optimism was surrounding the creation of other blockchains, right? And then it fell. Bitcoin fell 83% on a day in the pro days power. MineGolf, one of the largest exchanges, has suspended trading for a market cooldown. So they're saying that, hey, they could draw parallels. Like the market we have right now is to a certain extent similar to the market back in 2013. So moving on, so they talk about 2017. 2017 is more retail, right? Because crypto is more accessible. And then most Bitcoin cycles have a bullish one involving speculation on a new technology or way to transact without current banking system and oversight from authority, right? So basically, this really gives you an insight like what institutional analysts think about the crypto market, right? So if we continue about this cycle, speculation and leverage was used on a much larger scale. This cycle involved many more institutional crypto institutions rather than individual retail investors, right? So look at this, right? You can see that on Coinbase, you actually have more institutional traders, okay, by volume compared to retail, right? So it kind of went down now because of this kind of bearish market, right? But retail was indeed here in 2021, at the end of 2021-ish, right? So retail investors are more likely to buy and hold crypto relative to institutional who might be more willing to trade long and short crypto portfolios. So with the ETH 2.0 coming up, there were talks about how there is more futures and options, right? So these are actually tools used by the institutions in order to speculate on a price. On the other hand, retail is more prone to hold these cryptocurrency, believing that in the future, one day these technology could have application, right? So at first, they talk about the halving cycle, which I won't go into detail. They talk about the price correlation, and then they talked about potential market speculator index for Ethereum. So speculative asset is like cryptocurrency or speculative asset, right? So it's hard to use a fair value model to estimate forecast price. So basically, they use a power indicator, which is a ratio for Ethereum and has a mean reverting of cyclic nature since 2017. In recent weeks, the indicator reached an extreme low that suggests the price to go up. So basically, this is the formula. Okay, so this is the index, right? So in recently, so basically the index was around this range at 18 July on June, right? So what happened is that usually when this index reaches the low, it basically signals the market to go up, right? So if you look at this, it really shows you that right now we are in the mid rate, right? So if you are FOMOing, right now, if you haven't FOMO, if you haven't bought here, there's a huge chance that you'll see a bigger downside when this thing goes up, when the whole market is driven by speculation, right? So this is actually in the bottom is the 90 days return, right? So once it goes down, the 90 days return goes up when it keeps going to a certain range, and then the return goes back down after it reaches a certain range. So right now we're actually very close to the 2017 range for the power indicator. So that's why there is news about institution like whales are reducing the long futures, right? They're reducing the longs for Ethereum, even though we have the Ethereum 2.0 merge. So they did talk about the two type of investors. One is traders. One is believer, the people who view Ethereum as future digital infrastructure and participate on-chain protocols, right? So these are the people who believe in the technology itself and uses the technology themselves. The others are actually speculators, are solely speculating on the short-term price appreciation of an asset and are not well integrated with the Ethereum ecosystem, right? Causing active addresses to rise in relation to network transaction volume, resulting in a higher power indicator value. Subsequently, a higher and extreme level of power indicator value seems to signal that ETH prices are buoyed by short-term price speculation. So basically what it means is that if this indicator keeps going up, then it becomes more speculative, and therefore there's a chance that it would go further down, right? So they talk about points. What happened is that points to the local market top or bottom has varied based on the cycle, right? So it is informative when reaching an extreme low, indicating that speculators have given up and possibly turned to short using leverage futures instrument, leaving room for a short squeeze, which also pumps the price up, right? And the recent signal is actually mid-June. So now maybe in the next market, we could have a look at this indicator if it's public and maybe trade accordingly, right? So they did talk about the merge. So what could happen after the merge? So it captures market price and activity, but not supply. So they're saying that there's a chance that if the blockchain is being utilized, right, it would cut off the supply because a lot of ETH is being burned, right? So because a lot of ETH being burned, so the market will assume a lower ETH availability result in higher price, right? Impacting the numerators in the power indicator ratio, right? So they also talk, so they will see how it will evolve to fit into this thing after the merge. And then they talked about how it cannot be used, not really applicable for Bitcoin. So this is pretty much, and then they talked about leverage, which I won't go into detail. So this is pretty much what the report is talking about, which I find interesting because today I do want to spend some time to talk about the 2.0 merge. So there was a tweet that came today, and I saw this, and it's actually very informative. It's for Olympio. So if Ethereum hard fork is coming, you might want to maximize on-chain ETH for when it happens, withdraw from centralized exchanges, take an ETH loan, dump all proof of work asset for proof of for ETH proof of work. I think this means dump all proof of work asset for ETH proof of stake. Have a ready-to-go account on the greedy exchanges supporting the S-chain. Trade on ETH proof of work. So basically what he means is that right now we'll have the ETH 2.0, right? So once ETH 2.0 happens, the Ethereum chain will move to proof of stake. But at the same time, now you have some miners saying that, hey, I want to open my own chain, right? So they will open another chain that is called a hard fork. So at the same time, there would be two blockchains happening at the same time. So imagine using your MetaMask account and then using your MetaMask wallet connecting to the Polygon blockchain, right? So in the future, the old proof of work blockchain, if forked, will be similar to the Matic blockchain, right? So what happened is that he's saying that, hey, if you're here for the Bitcoin Cash and Bitcoin Gold, Bitcoin forks, then you know how these amongst the first airdrops in history. So they talk about the Bitcoin Cash price and Bitcoin Gold. So what happened is that your asset, say for example, you right now have 1 Ethereum, right, in the proof of work chain, and then it goes to proof of stake. And on a proof of stake chain, you'll have 1 Ethereum because, it goes there, right? It migrates to the new chain. But at the same time, if someone decides to fork the chain, like continue the chain, at a point of time where they, merge, there will be another chain where you own 1 Ethereum as well, okay? But this is gonna be run under a proof of work consensus mechanism, and the other will be using the proof of stake mechanism. So in simpler words, what basically it means is that you have an Excel spreadsheet, you have one workbook, okay? You have one spreadsheet, so you have all the data here, and then you move to proof of stake, okay? So basically you move to a new Excel spreadsheet with the same data, and then life carries on as usual. But if the miners decide to continue mining, basically what will happen is that spreadsheet will continue writing, but it will no longer synchronize with the proof of stake blockchain. So imagine if you have one NFT in the past, what you can do in the future after ETH 2.0 is that on the proof of stake chain, which is the official chain, you can sell your NFT to someone, right? But at the same time, you also own that NFT in the old Ethereum proof of work chain, and you can also sell it to someone. But by then, Ethereum would not have the same value because that would be the old obsolete chain, right? So what he was saying is that when the merge happens, the ETH transitions to proof of stake. There will be 2 chains, proof of work and proof of stake, okay? Miners will try to get the last breath of value before selling the hardware. They will keep the proof of work Ethereum alive, effectively hard forking the blockchain, okay? But it really depends on how long they do it, right? Because if the value of the proof of work Ethereum has no liquidity, the price will keep going down, and it's not profitable for miners to continue running that, right? So everything you have before the chain will now be split into the new POS chain and in the existing proof of work chain. So NFTs and asset and wallet, liquidity provided, lending and borrowing, in your on-chain asset will duplicate, okay? So this is actually fascinating, and I think we need more discussion on this because this is really fascinating. So people like this person has been predicting a chain split for quite some time. When this happens, several things will work happen, especially in DeFi. There will be 20,000 CryptoPunks and Bored Ape Yacht Club, 2 times Uni tokens, 2 times Ethereum, 2 times Wrap Bitcoin, 2 times USDC. So you get the idea. So think of the USDC, which is 1 by 1 backed by US dollar and with a market cap of 54 billion. After Ethereum split, there will be 54 billion USDC on each chain, 108 billion, and only 54 billion backing in Circle. So all of the USDC in one of the chain will tend to zero. So you can imagine which one it will be. So basically, if you want to redeem your USDC, Circle would not let you redeem if it's USDC on the proof of work chain, which is the old chain. So it will go to zero. So that's the logic, right? So users will most likely sell everything on the proof of work chain, USDT, DeFi token, meme token, blah, blah, for ETH proof of work, which will be the only token with some speculative value. And this will probably happen within the first block, gas war, MEV vibes, you name it, right? So in the first minute of the fork, everyone will want ETH proof of work. Price might even briefly surpass ETH. Everyone will dump everything they got for ETH proof of work, send ETH proof of work to one of the supporting centralized exchange, lastly trade it for other assets like ETH, and airdrop money for bots, right? So the application of the DeFi proof of work ecosystem is dividing by zero, is imploding, right? So how to get ready, not financial advice. So what he would do is he'll withdraw all your ETH from centralized exchange to on-chain ETH. So if you hold a stick ETH, one of the most fastest assets to dump, lend it to Aave, borrow ETH for other asset, monitor APY close, it will skyrocket, don't buy token, it will dump, and also research how to connect to the proof of work chain once the merge happens, and then cancel any OpenSea bid you made, they will be accepted on the proof of work chain, your ETH proof of work will be taken from you. Remove your liquidity from the pools before the merge. You're better off having ETH/USDC and proof of work chain than proof of work uni position of ETH/USDC. You will not be able to remove liquidity on time, lots of bots, and will be left with ETH of work. So he's saying that you should open account in these exchanges that currently say that they will support the ETH proof of work chain. Take a loan, borrow a lot of money, and then use that to move to these exchange and dump it and make some money, right? So this will happen in September. So this is actually really interesting. And then I did ask a question, so what will happen to the value of blue chip NFT, right? If the owner sells it to wallet A on the old chain and then sells the other NFT to wallet B on the new chain, wouldn't that devalue the NFT since the perceived ownership has been duplicated? So this is a question. So the reason why I was talking about centralized exchange and why I wanted to cover this is that Binance came up with this, right? So Binance is actually closely monitoring the development of the merge, scheduled to take place in Q3, Q4. So they will support the merge. Okay, so that is the proof of stake chain. If there's new fork token, so basically what they're saying that if you hold Ethereum on the exchange, if there is new fork tokens, there's a chance that they might drop the fork token to you. There's a chance, but it has to go to straight listing review process, as Binance does not for other does for other coin and token, right? So basically, there's a few things that you can do. It is kind of like free money, right? In a sense that you have duplicated, but one would devalue very quickly. So it really depends on you, right? If you want to go for this option where gas could be high, really risky type of stuff, you could move it to an exchange, to the blockchain. Or if you think that, hey, I want to play it safely, you could leave your ETH on a centralized exchange. If it does get full, you have airdrop tokens, then maybe you can sell it, right? Because long-term wise, the proof of work chain might not be as sustainable because the value of Ethereum is the authority that people trust in the online ledger, right? But if you have like a secondary chain, maybe that chain might not get as much as authority, right? Because you'll have two type of blue chip NFT holders and stuff like that. It will cause some chaos. It'll be interesting to see. So another news I saw today, so this is some insight. So this is actually from a Javas Lab, which is a Twitter account. So it's talking about how the Ethereum Merge trade is playing out on-chain and off-chain. So what they were saying is that, whales are actually buying Ethereum, okay? But then now, July 26th, so red is actually the whales, right? And also retail. White is basically retail. So right now, basically, it's just retail buying at these prices, right? And also they were kind of hinting that there's a chance that the reason why Ethereum is leaving all of the exchanges is that these whales actually want to get the fork token, and then with these fork token, they can sell it for free cash, right? So this is basically the analysis of this news article, which I think is actually very helpful and very interesting. So definitely check this out. Go to Javas Lab at Twitter and then follow him or her and then read his articles, right? So moving on to NFT news, really interesting news. So what happened is that today, really funny, Magic Eden came up with a YouTube video talking about the difference between Ethereum NFTs and also Solana NFTs. And then what they said in the video is that NBA Top Shot is actually a notable Ethereum NFT. So what happened is that OpenSea was like, Top Shot is not a notable Ethereum product. This is what happened when you don't do your research, right? And then I post this, like, the beef is real. You know, it's funny to see OpenSea having like some banter with Magic Eden. For those of you who do your own research, or if you watch this channel where I cover the Flow blockchain, NBA Top Shot is actually on the Flow blockchain according to D-App Radar, right? So definitely not Ethereum. So, you know, OpenSea is just poking fun at Magic Eden. And then this got a lot of hype in the crypto space, right? A lot of people were talking about this post, 445 comments, 607 retweets, right? And people are just memeing this. So this is hilarious in the NFT space. So moving on to the metaverse. So what happened is that for those of you who do not know, NVIDIA is actually the graphic card company, right? They have a platform called Omniverse, which is a solution to build the metaverse, okay? And the reason I want to share this with you is that they currently have an event where they are talking about different type of product releases. And I want to show you like the potentials of this product, right? So this is actually about 3D design collaboration and world simulation. And then it is what they're trying to do, like build digital twin and world simulation through 3D design collaboration, accelerated development of 3D tools, open and interoperable, so trying to build open source standards to build the future metaverse, multi-GPU, multi-node, scalable, accessible for all audience. So these are the connections to the Omniverse. But what I wanted to show you is actually this video, right? So this is the montage of this event. So right now they have an event called SIGGRAPH 2022. So this was posted yesterday. So here you can actually see how realistic 3D rendering is right now, right? You can see how realistic this is. And you kind of will see that if this is actually paired with VR technology, you have all these particles, these lighting, and this type of stuff. The metaverse is actually even more closer than we thought, right? Because tools are actually very advanced. You have a lot of simulation, physics, simulation that really shows you how, how we could really replicate another world in the digital space. So this is basically the montage, but what I wanted to show you is that they also have this thing that is super cool, and then we can listen to the audio. I don't think the audio is working. So basically what happened is that you can actually use the software to type a face, and then this AR will basically use the 3D model and say this face, right? So this is actually called, you use an audio. So this is called audio to face, right? And then you can actually change whether it's happy, it's not happy, and then you can render it, right? And then this is actually very high fidelity, right? You look at the rendering, and then you look at the facial expressions, the eye blink, and also stuff like that. So what I wanted to share with you is that the future for the metaverse is extremely bullish, right? So this is also talking about this application. So this guy was saying something, and then it got transcribed, and then this virtual avatar repeats it, and then it looks very real, right? So unfortunately, my audio is not working, but I just want to share this with you for metaverse news. So yeah, this is all, guys. If you're trading, trade safe. This is your host, Non-Fungible TC. Signing out.